Good morning once again. Well, as we begin the day, we're going to talk about a lot of stocks in focus that have come out with their numbers post-market hours. So our entire research team is joining in. First up, Hindalco. Novelis came out with its Q4 numbers. Look pretty good.
Well, Novelis' numbers look good, Sonia. They were better than what the street was working with and better than what they've guided for. Some part of the street was expecting that, but nonetheless, it's a good set. Adjusted EBITDA came in higher by close to around 28%. And for Hindalco, we look at two numbers. One is the shipments, which came in higher by 4.5% on a sequential basis. So good recovery on a sequential basis. On a year-on-year basis, it was up close to around 1.5% odd. The adjusted EBITDA per ton clocked $540 per ton, which is the highest we have seen in the last 7 quarters or so. And remember, this is higher than the management's guidance of close to around $525 per ton in the near term. On a longer term, they're talking about $600 per ton. But when you deliver a number of around $540, that compares with $525. Good going out there. How did they manage this? Relatively higher volumes, lower cost of production, and improving mix as well. The net debt number has come down on a sequential basis because of improved cash flows as well as working capital release. They've lined up the capital expenditure for the year at 1.8 to around $2.1 billion odd. But these numbers are better than what the street was working with. And that's why, in fact, expect the stock to open up in the green.
Nigel, I just want to make a quick mention of the flashes at the bottom of the screen. If you can have the sort of lines up. This is important. And this is, of course, this affects everybody or all participants in equity markets. Not the least us here reporting on markets, but all of you as well. So the NSE CEO, Ashish Kumar Chauhan, essentially is saying that SEBI has returned the application which they had submitted with the regulator for them to be able to increase sort of trading hours. And, initially the proposal was to take up the trading hour for the derivative segment by about 3 hours, extended for another 3 hours or so. And that application has been shelved. And that largely is because SEBI feels that there has not been enough sort of consensus amongst brokers and there have been disagreements. So there's not been kind of one view which kind of calls for them to be able to allow to sort of extend the trading hours. So this matter is shelved for now. And I think this, I dare say, does come as a sort of relief for a lot of market participants who were kind of who were obviously not in favor of something like this. So as of now, nothing moving on this one as far as market timings are concerned. We can for now stop talking about this one because it keeps coming back every few months or so, every couple of quarters or so. But I think there is some finality to it, at least for now. But let's get back to the stocks that we are watching out for with our research team. Lupin is the next one which reported numbers. Ekta's got details here. Ekta, morning.
Morning. Well, Lupin, mild red is what I expect today because it was a largely in-line set of numbers. So the revenue missed estimates. The street was anticipating, say, a 14% growth. It reported around a 12% growth. Margins were in line, 20.1%. It was in line with expectations. It was 20% in the previous quarter. And the trajectory of the margin should come up for you as well. Now, profit was at 359.4 crores, but that was because of an impairment of around 200 odd crores in this quarter. And hence, the adjusted profit came in at around 550 crores, which was higher than expectations. North America was probably the only chink in the armor, 39% of sales. The Q4 sales came in at $209 million versus estimates of around $209 to $235 million. So it was at the lower end of estimates and lower on a Q-on-Q basis. India growth also was lower in terms of growth as compared to, say, the previous quarter. So India grew around 8.3% on a year-on-year basis as compared to around a 13.4% growth in the previous quarter. And hence, those are the only two sore points for Lupin, where the US business came in lower than expectations. India was a bit sluggish in terms of the percentage growth, and hence I expect the stock to mildly be in the red. But remember, the stock has run up very significantly, and hence maybe the best is already factored in as well.
Okay, thanks a lot for that. Well, Godrej Consumer reported a decent set of numbers. Mangalam is here to give us the latest on that. Mangalam, after many quarters, we're seeing a decent pickup in a lot of these FMCG names.
Yes, it seems like the staples are back in fashion if, numbers and commentary from Dabur, Britannia and the likes are concerned. And if you look at Godrej Consumer as well, it may well be the stock of today's trading session. Why is that? Because it's reported industry-leading volume growth on both an organic and a reported basis. The margins for the company have improved 230 basis points despite them having stepped up their ad spends. And the net profit, that was impacted by an exceptional. So if you adjust for that, it's a beat across all parameters. And mind you, the company had already given a fourth quarter update. So the revenue at 3386 crores compares with the poll of 3327 crores. So it's a mild beat out there as well. EBITDA closer to 756 crores. The street was working with a number of 731 crores. Margins at 30 basis points beat as well. On the bottom line, there is a loss because of an exceptional near 2400 crore loss on account of restructuring in their Africa business, which also is bottom line positive for the company, as I'll explain. But internals as well. Domestic organic volume growth is 7%. The street was working with a range of 6 to 8%. And consolidated volume growth, which includes the Raymond acquisition that they made, the Raymond consumer business acquisition, is close to around 12%. High single-digit volume growth and personal growth. HUL did a lot lower, so this is a positive here. Also reported double-digit volume growth in hair colors, air fresheners and fabric care. In the international business, while they've completed the reorganization of Africa, they've said that this would add to their profitability by about 50 crores, even as it shaves off 470 crores from the top line. So that would be a positive in the medium to long term.
Okay, all right, Mangalam, thanks a lot for that. And do note, we'll connect with the management of Godrej Consumers at 9:40 a.m. later today. Let's move to the tech space then. Happiest Mind came out with a set of numbers. Rima joins us for a quick analysis. Rima.
So it's a steady quarter from Happiest Minds. A top-line growth of 1.4% quarter-on-quarter. The revenue growth has been hovering between 9, 10, 11%. For FY24, as guided by the company, they've ended the year with an 11% top-line growth. Margins, according to our calculation, the company's margin calculation is a bit different, but EBITDA margins, according to our calculation, up 20 basis points to 19.9%, driving a profit jump of 25%. So a steady set of numbers.
All right, Rima, thanks very much for that. Marico is the next one we were focused on. Mangalam has got details here. Mangalam.
Well, the results came in the last hour of trade yesterday, but a lot of the details and management commentary came post-markets yesterday, and that's also a big positive because the management has said that consolidated revenue in the next year will trend upwards. In fact, in the third quarter, they posted positive revenue growth. After many quarters of decline, they see volume growth gradually picking up. Domestic revenue growth will outpace volumes in the first quarter itself, and they expect the margins to inch up further as well. For international business as well, maintain strong double-digit constant currency growth momentum for FY25 and beyond. Even the diversification which the street likes, foods will be 2x of what they are right now by FY27. We'll see average revenue, for the digital-first brands to be 2x as well. And they are aiming for double-digit EBITDA margin in digital-first brands by FY27. They're also increasing their distribution, so firing on all cylinders. See green on Marico too.
Okay, see green on Marico. Got that after a while, right? Sonal is with us to talk about Gujarat Gas and why you should watch that one. Sonal, good morning.
Good morning, Sonia. Well, Gujarat Gas reported quarter four numbers and they were better when it comes to margins and profits as well. To take you through the numbers, it was a revenue growth of 5% on a sequential basis. EBITDA was up 47%. Margins came in at 13.7% versus an estimate of 13%, and profits were higher as well. Now, margins this time were higher because of lower spot LNG prices, which is a raw material for them, and also high propane prices, which is a competition for them. And because of this, we saw EBITDA per unit, which was down 5% on a YOY basis, but up 41% on a sequential basis. Volumes, a mild miss to come in at 9.7 MMSCMD, which was led by their major market, that is the Morbi market. But remember, spot LNG prices, they have surged in the month of April, and propane prices, they have come down, could indicate that there could be headwinds going forward. In fact, Citi says they have a sell with a target price of 450, and they believe fourth quarter represents a near-term peak in earnings for Gujarat Gas, and for just that reason, going with red on that stock today.
Okay, thanks for that, Sonal. Well, let's hop across to Abhishek. He's here to tell us about Fusion Microfinance. Morning, Abhishek.
Morning, Nigel. So strong performance with respect to business momentum that they have seen in Q4. However, provisions are elevated as they have written off massive asset quality or gross NPA. So disbursals are up 24.5% YOY and about 8.9% sequentially. AUM growth is 23.5% YOY and about 7.3% sequentially. They have written off 75 crores in Q4, which has meant that gross NPA ratio is at 2.9% versus 3.04% in the previous quarter. Now, net interest margin has expanded both YOY and quarter-on-quarter, so it is coming at 11.59% versus 11.54% in the previous quarter. The NII growth is healthy at 30.6% YOY and 6.7% sequentially. Provisions have spiked up by almost 27% quarter-on-quarter, and that's impacted the profitability. PAT growth is about 15.9% YOY and about 4.9% sequentially. Back to you.
Okay, thanks for that. Well, Sonal is back with us to give us some more earnings that she's looking at. Sonal, what do you have?
I have 3 stocks on my radar. Let me start with Gujarat Fluoro because it was a weak set on a YOY basis, but sequentially it has been very good, and that is what we are looking at. Revenues are 14%, EBITDA 15%, margins have been flat at 21%, and profits are up 26% as well. Management commentary is positive. In their fluoropolymers business, they say FY25 will see some impact in terms of exit of legacy players, which will be good for the company. And in bulk chemicals, plants ran at full capacity in the quarter gone by. For DCM Shriram, it was another weak quarter. Revenues down 12%, EBITDA down 22%, profits down 37%, and their net debt has also risen on a YOY basis as on 31st March. So going with red there. Root Mobile also expect red tick on that stock because revenues were down 0.7% on a sequential basis, and they posted a revenue growth of 12.7% for FY24 versus a guidance of 15 to 17%. So they could not meet their guidance. Company also says that the CPAS industry is witnessing some headwinds since November 2023 in terms of cost optimization. On a YOY basis, EBITDA declined to 12.3% and profits also were down 13.3%.
All right, Sonal, thanks very much for that. So those are a list of earnings and stocks with news flow to watch out for. We'll take a quick commercial break here. We'll come back and, okay, I think we'll just quickly recap the stuff that we put out. So stocks to watch out for on the upside, Hindalco, Godrej Consumer, we had Happiest Minds, Marico, Fusion Microfinance and Gujarat Fluorochem. While stocks with negative news flow are Lupin, Gujarat Gas, DCM Shriram and Root Mobile.
Okay, we'll take a short break. On the other side, we've noticed that a lot of these FMCG names have started performing this quarter. Is the worst over for them? Amnish Agarwal of Prabhudas Lilladher will be joining in to talk about that. He'll also talk about many other stocks. We also have Natarajan Srinivasan, the MD and CEO at CG Power and Industrial Solutions, who will be with us to discuss their Q4 earnings. Stay tuned.